when you look at what's happening right now with the bond market, I know you just released a video on bonds specifically, and what's going to happen here with interest rates in the United States and fears of inflation sounding the alarm. Again, I'll put this up from the Koblisi letter just about an hour ago. The U.S. bond market crisis is intensifying. While everyone is focused on AI and the Iran war, the U.S. bond market is in a complete meltdown. What happens next with bonds? What does this mean for the average viewer of our show?
Well, the average viewer is going to be facing higher mortgage rates. That's the key thing, and higher interest rates on credit that they receive from loans they receive from a bank or their credit cards. So what we've got, the inflation number just came out this morning. It jumped from 3.4% per year to 3.8%. That's bad news. You're not going to get the inflation genie back in the bottle in the United States. I've been saying this for months, and the main reason for that is that for the last 18 months, the money supply has been accelerating, and the money supply is the thing that fuels inflation. And if it's accelerating, you're going to end up with more inflation, and that's exactly what we're getting. This will be really the Achilles heel for Trump, is going to be inflation and the affordability problem. Inflation and the affordability problem. The 30-year bond went over 5% today, and
Wow.
and that's bad news. The 10%, the 10-year bond went over 4.4%, and a 10-year is the key bond that all the interest rates, like mortgages, are all geared to the 10-year. So the bond vigilantes have woken up. They've come out of hibernation. This is a very big deal, because everybody's going on and on about the market's going up, the market's going up, the market's going up every day. We have good news, the market goes up. We have bad news, the market goes up. What market are they talking about? They're talking about the stock market. Right. The bond market it's been bad news for the last 3 or 4 months, particularly after the war started in Iran. If you go back, look at that bond market, it started getting into trouble once the war started in Iran. So all these things have very negative feedbacks and consequences that the administration simply hasn't thought through.
Yes. So is it then your assertion that the stock market is doing well because it's a perversion of belief systems, but the bond market is telling the real story?
Well, I think the bond market always tells the real story.
But then why is the stock market behaving this way, do you think?
I think the stock market is behaving this way because we're in a bubble. The stock market's been in a bubble for quite a while, and there's a stock market mania going on. It's the AI mania. And if you have a mania going on, no matter what the news is, the market just keeps going up. Now, one thing that is interesting, if you're in a bubble, it's virtually impossible to indicate just when the bubble will pop, or will it just dissipate slowly and fizzle out over time. That's very hard to determine. But there's one factor that is important that usually causes bubbles to pop, and that's when the monetary policy of the Federal Reserve tightens up. And right now, as I said when we were talking about inflation, it's not tightening up, it's loosening up. So that's one reason that accommodates the bubble, you see.
Oh, no.
You said, well, why is the bubble going up? Okay, we have a mania. We have the AI mania, and that's part of the picture. But the fuel behind it, the liquidity behind it, is the money supply accelerating and going up. Now, if the monetary authorities decide they've had enough of inflation, that's 3.8% now, their target is 2%, and if they start tightening up from where they are right now, then we will see what happens to the bubble, and it might pop. That's what they usually do. When there's a pivot in monetary policy towards tightness, stock market bubbles pop.